back, America. I'm Hugh Hewitt. One of our great sponsors is KeyCity Capital. But Ty Lasater joins me, and I want to do my disclosures. I am an investor in KeyCity Capital. The Fetching Mrs. Hewitt and I invested, I think it's 2 years ago now. You can't get into the fund that we are in because it closed. They have a new fund open, and we're very happy. I mean, you'll be very happy. Read the prospectus. You have to be an accredited investor to invest with KeyCity Capital. And I like Ty Lasater to come on every now and then to review for people what it is that KeyCity Capital does. Good morning, Ty. What does KeyCity Capital do?
Good morning, Hugh. It's always good to be on here. Well, what we do is we make it feasible and accomplishable for accredited investors, everyday Americans that have a good job, have a good income, have done a great job saving, but find it hard to get to counter-correlated investment opportunities as it pertains to the financial market. And so our product allows investors to come in alongside us, a seasoned operator. I've been in the business 15 years, to invest alongside us, partner with us, and experience owning real estate without the hands-on duty of having to deal with tenants or toilet problems or termite problems, or even in some cases, like I experienced last week, a major fire. We have insurance in place to deal with things like that. And then we have our great employees who jump on the product and deal with all of the things that can come about from having a fire and displacing tenants and the construction that comes thereof. But what that comes with is tax deferment or tax benefits alongside your investment. So when you invest with us, you get the benefit of owning real estate. It's a physical asset, unlike that of the financial market. So it's a great way to offset some of your investments in stocks, bonds, and mutual funds into real estate. And that real estate delivers tax advantages to you as an investor, and oftentimes cash flow as well. And so that's kind of what we focus on. We focus on delivering a strong return to our investors that's counter-correlated to the market, along with cash flow and those tax benefits. And right now is a great time to do that because we're seeing a huge issue across the United States. I read this morning, the Low Income Housing Coalition said that there's a 7 million house shortage for the 10.8 million low income Americans. And so we're delivering a product that helps offset the pressure that those low income individuals and families are having right now at the grocery store and at the gas tank and things like that.
Now, my wife and I invested with you because I wanted to diversify our portfolio into apartment-based real estate, but I don't want to own an apartment. I can own a house. I can handle a house. I can't handle an apartment building, and I wanted no exposure beyond my investment. And there's no guarantee of return. Past performance is no guarantee of future results. I'm very happy, but there's no guarantee here. But I did want to diversify, and I think that's what you're offering with a bit more specificity than REITs do. I know some people say you're a REIT, other people say you're not, but that's what it's all about, diversification, Ty.
Absolutely, diversification, and we're not exactly a REIT. A REIT does not give the benefits, the tax benefits of owning real estate. With a REIT, you're investing in a company that owns real estate, and so it's no different than owning stocks. It would be like owning stocks of a company that owns banks. But with a REIT, you're owning stocks that that company buys real estate. With us, you're actually owning the real estate. So you get all of the benefits of owning that real estate. And I get to do the back-breaking work of dealing with all the problems. And I have a team, about 150 employees that deal with all that. We have a bunch of on-site employees and everything. And you get to use my experience and my history and my mishaps that I've learned from many years ago and the things that we do now to prevent those and focus on opportunities that we're seeing in the marketplace right now.
KeyCityCapital.com/Hugh. KeyCityCapital.com/Hugh if you want to get a prospectus. Ty, we got a minute left. What are interest rates doing to your business? Because they're just stuck. They're stuck, and they're high.
They are stuck. Interest rates are really hurting the individual right now. We've got in my business, I've got ways to go around that. And I think how you change is how you succeed in business. And so we've implemented changes and things like that. And we're still direct to a Fannie Mae product, a loan product that's still in the low 6s and high 5% interest, which we underwrite for up to 7 and 8%. So interest rates are impacting our business, but we've got ways around that and creative financing ways to take advantage of the current market that we're seeing right now.
There's a fund open right now, Ty. Are you already planning the next fund?
That's right. I was actually looking at the next fund this morning, starting drafting what we're going to accomplish with that. We should be closing our current Fund 12 in the coming weeks. And Stephen and myself and our internal general counsel have already started discussions on what our next fund is going to be.
So if you want in on the one that's open now, act quickly. No guarantee that you won't be there in time or that you will be there in time, but you might be. Go to keycitycapital.com/Hugh. Ty Lasater, always good to check on my money and check up on you. Good to see you looking healthy, wealthy, and wise in Dallas.